Welcome. On July 4th, 2025, President Trump signed into law the One Big Beautiful Bill Act, and with that came a number of changes to our tax laws as currently written. Quite a few deductions for our four AGI deductions and a few even for our itemized deductions. One of those was our no tax on overtime, and this is from 2025 through 2028 only. JT, what do you think about that?
I love it. I think this is a great provision. It's got a lot of excitement behind it. It was one of the campaign promises that we had heard, and we see it come to fruition. Now, what's fun for us is to apply this in the practical sense and use our tax mechanics to come up with the deductions. So and see how this will impact our clients. So really exciting.
Yeah. The deduction, so it is not $25,000 for everybody. It is only for married filing joint. The deduction for all other filers or single and head of household is the 12,500.
Yeah, and this is a pretty common theme that you'll see in tax where married filing separate, when clients ask about married filing separate, we just got married, we want to do separate. 9.9 times out of 10, it is a bad answer from a tax perspective. And this is a great example of why it would be a bad deal from a tax perspective. So if you are married filing separately, you do not get the deduction, period. So it is almost punitive from that perspective. And boy, $25,000 is a lot of overtime income that you'd potentially be walking away from. So I think if anybody has filed separate in the past for whatever reason, and mostly in practice, what we see is folks will do married filing separate for non-tax reasons, like they're about to get a divorce or some other non-tax issue. But yeah, from a tax perspective, married filing joint, like I said, 9.9 times out of 10, that's the way that you want to go.
The income does phase out, or the deduction does phase out as your income gets higher. So for a married filing joint and return, that phase out starts at 300,000. It's half that for single and head of household. And then when you approach that phase out, you start to lose the deduction.
Yeah, so once you get above those phase out thresholds, the deduction is reduced by $100 for every $1,000 that you are over those particular thresholds. Now, those thresholds are pretty high. They're fairly generous, and it uses this phrase MAGI, modified adjusted gross income. And modified adjusted gross income is not your take-home pay or your gross pay that you would receive at work. I almost said salary there, and I think that's a really important distinction I caught myself. It's not salary. So if you are a salaried employee and you work more than 40 hours a week, sorry about it. This has to be true overtime, right?
Yeah.
That's what's really interesting about it. And we expect it to be reported on a W-2 or a 1099.
Mhm.
And oh, go ahead.
Currently though, our W-2s and 1099s don't specifically separate out that overtime pay. So there's going to be this weird year for 2025 at least, where employers have to figure out a way to report that to their employees so that they can report it on their tax returns and be able to separate that overtime pay out.
Yeah, and now we're waiting on IRS guidance for this, so we really don't know what this exactly will entail from a logistical and mechanic perspective. But if I had to guess, I'm thinking this is probably accomplished on some sort of company letterhead or addendum to the W-2. It seems like a simple change, but if you still receive a paper W-2, like my goodness, even the envelopes have to be in a specific style and layout so that those windows on the envelope are in the right spot. And if we change that, like this creates a huge heartache. So I would imagine that there's going to be some report that would be acceptable for 2025, and then we'll get this adjusted going later. Now, what we're telling a lot of our clients is think about the overtime because we're more than halfway through the year at this point. Think about the overtime that you've already worked during the year. The withholding has already happened on that overtime, and we don't expect the withholding tables or the withholding to update at work for this $25,000 exclusion. It will just really be a deduction on your tax return. So, kind of anticipating larger refunds for our clients on their 2025 return when they file those in 2026 as a result, which I think will be really interesting.
Yeah.
So Yeah, well, stay tuned to see how that works with the timing of refunds coming in 2026.
Yeah. So can anybody get the overtime pay or how
Yeah,
does
so I caught myself on the salary, right? Where if you're salaried employee, it's not happening, and technically, you have to be eligible for overtime under Section 7 of the Federal Labor Standards Act. And this is going to be kind of your traditional overtime eligible employees. So we think about folks in our neck of the woods. We have a lot of steel workers, steel mill workers, and they would ideally, if they are not salaried and they are true hourly employees, be eligible for this overtime we would expect. Now, this is interesting because then we're still waiting on guidance from the IRS, but will that extend then to your professionals that are still professionals from the sense that they need a license to do their trade, such as nurses, which is a really interesting question. If they pick up an extra shift or if they're on call as part of their overtime, yeah, we're really speculating at this point without further guidance from the IRS, which won't come out until a little bit later this year. But if it's overtime and you're getting that extra rate of pay, so whether that be time and a half or double time, something to that capacity, it's something that we would expect to generally fall under this exclusion.
yeah, and that you said the overtime or double time or time and a half. It's important to recognize that that excluded income is only that extra pay. So if you're normally making $30 an hour and now you're getting 45 because you got time and a half, the deduction is only for that $15 difference on that paycheck.
Yeah, and that $15 is still subject to Social Security and Medicare taxes. This ends up just being an income tax deduction. So
Mhm.
we've definitely dealt with a lot of folks already reaching out saying, "Hey, how do I tell my employer that I don't want this taxed or I want this paid directly to me in, non-sequential, unmarked bills?" I'm kidding, but this is one of those pieces where we're still waiting on guidance from the IRS. I'm expecting more of a catch-up exercise on the 2025 return when we do those in 2026. So again, anticipate a larger refund, and I think that we'll catch up at that point.
It's also important, this is an above the line deduction. You can take it whether or not you itemize if you are entitled to the no tax on overtime. However, we do have to be aware of the different states and the state rules on whether or not they will be taxing the overtime pay.
Yeah, and this is to use a phrase that you'll hear in consulting a lot. It depends. It depends on your state and something that we call conformity to the code, conformity to the federal tax code. So whether or not a state will agree and allow this deduction to happen, it may be added back in a lot of states. So if you took a $25,000 deduction on your federal return, it could end up being that on your state return you'd have to add that $25,000 back and include it to be subject to tax in that state. But I would imagine that your withholding on your state return would have covered that anyways. So there really shouldn't be like, hey, I'm going to have to owe on my federal return this year. I think
Yeah,
everybody should be okay from that perspective.
yeah, interesting. It'll be a fun year to figure out how we can report it and help our tax our clients.
Absolutely. All right. Thanks for watching.